All right, let's dive right into the IGI Strategy 2026 report. It lays out a really bold vision for the Pakistan Stock Exchange. So the big question on everyone's mind is, what does the road ahead actually look like for investors? Let's break it all down. So what's the big headline? Well, IGI is putting a pretty ambitious number out there, a target of 215,000 for the KSE100 index. To put that in perspective, that's a potential total return of around 33%. So what's driving this kind of optimism? The report really boils it down to two key things: an improving economy and a whole lot of market liquidity. Okay, a number like that, you've got to be asking, how on earth is that possible? What are the real drivers behind it? And more importantly, what's the strategy for investors? Let's get into the report's reasoning. To even start thinking about 2026, we have to rewind the clock a little and look at 2025. It was a year that really put the market to the test. And in a way, it built the very foundation for the momentum we're hoping to see. And what a year it was. I mean, just look at that number. The KSE100 index delivered a 47% return. Now, what makes that so incredible is that it happened despite some major headwinds, everything from geopolitical drama to serious flooding. That really points to some serious underlying strength in our domestic market. This timeline really paints the picture of the roller coaster we were on in 2025, doesn't it? The year started off strong. You had rate cuts, a successful IMF review, but then bam, the second quarter hit us with some serious geopolitical tensions that put the brakes on everything. As things cooled down, the third quarter saw a really sharp rebound before the year kind of settled down, dealing with floods and the Pak-Afghan border issues. So who was actually driving this rally? This is where it gets really interesting. You can see here that foreign investors were actually selling, pulling out $331 million. But, and this is the key part, all of that selling was basically soaked up by powerful domestic buying. Local individuals and mutual funds jumped in with a net $639 million, showing a ton of local confidence and really fueling the market's fire. All right, so that was the past. Now let's shift gears and look ahead. We're going to dive into the core economic forecasts that are really propping up this optimistic outlook for 2026. These are the numbers that are supposed to be driving the engine. First up, economic growth. The report is forecasting our GDP to grow by 3.3% in fiscal year 2026. After a period of just, getting stable, this signals a real pickup in activity. The recovery is expected to come mainly from the industrial and services sectors getting back on their feet. Now, inflation, always a hot topic. The forecast is for an average of 6.8%. Now, hold on. The report does mention we might see a bit of a spike early in the year, probably because of higher utility prices. But the idea is that it's expected to cool down and get back into the state bank's target range in the second half of the year. This right here, this is a big one for stability. The forecast for our foreign exchange reserves to hit $22.2 billion by June 2026 is a huge pillar of this positive outlook. It's supported by strong remittances and a manageable deficit, and it suggests a much more stable external front, and hopefully a steady Pakistani rupee. This table gives you a really quick snapshot of that stabilizing trend we're talking about. If you look at the forecast for fiscal year 2026, you see a manageable current account deficit, a fiscal deficit that's holding steady, and a pretty stable rupee. All these figures together point towards a path of continued economic consolidation. Okay, so that's the big picture stuff, the macro view. But what does this all mean for you as an investor? How do you actually use this information? This next part is probably the most important. We're covering the key themes, the sector picks, and of course, the risks you've got to watch out for. So, IGI points to three main themes for 2026. First, even after that big rally in 2025, valuations are still looking pretty attractive compared to where they've been historically. Second, we're expecting a comeback in demand for cyclical sectors. Think things like cement and autos. And third, those energy sector reforms everyone's been talking about, they could finally start to unlock some serious value. So, where should you be looking to invest? The report is pretty clear. They recommend an overweight stance on several key sectors. That just means they think investors should consider putting a bigger chunk of their portfolio in these areas. We're talking about commercial banks like UBL and MCB, exploration and production companies like OGDC and PPL, and cement companies like LUC and MLCF. Of course, no forecast is ever a guarantee, right? So the report lays out two potential paths. There's the bull case, the super optimistic one, where things like more rate cuts and big progress on projects like Recoveries could push the index all the way to 258,000. But then there's the bear case, the flip side. If inflation really spikes or the IMF program goes off the rails, the index could drop down to 143,000. And look, hitting that main target of 215,000 means we have to navigate some potential risks. The report highlights 4 main things to keep a close eye on. Any trouble with the IMF program, a flare-up in political or geopolitical tensions, a lack of fiscal discipline from the government, or a sharp, unfavorable move in the rupee. Any one of these could really challenge the whole outlook. So there you have it. That's the potential roadmap for the Pakistan stock market in 2026. The analysis points to a pretty positive direction, but the path is definitely going to have its share of risks. The real question for every investor is, with this outlook in hand, where will you find your opportunity?